restrictive. So to me, I'd rather take control of what I have now and go and do something to manage that gap that's there for retirement. So some of the things I'm going to share with you now is around using, for example, the strategy of the tax that you pay. So if you're working for somebody, your employer's paying tax on your behalf, and or you may be self-employed or you run a company, etc. You're paying tax in there somewhere. How do you use that sensibly to then go through and perhaps start some kind of investment cycle that can have some benefits that we'll talk about as we go through this. So negative gearing is a term that's been thrown around now for a long, long time, as far back as I can remember, and probably has been used in some, probably inappropriate ways over the years. And people misunderstand what it actually means. At a core level, and I'm going to use the example here of a new property simply because there are some great tax benefits of new property. The way negative gearing works is you have rental income, and don't worry about the numbers on the screen here, they're purely for illustration. In your tax return, you will declare some extra income, which will be from rent. You've had a tenant. You're going to pay perhaps some rental management fees for the privilege of. You're going to have some loan interest. Now, the loan interest is all the interest that you paid on any loan associated with that investment property that you held for that period of time. You'll have things like rates, which could be council, water, etc. And there's this wonderful thing called depreciation, particularly on brand new property. So what happens there is you end up with a depreciation schedule that lays out, for example, 10 years worth of depreciation that you're allowed to claim on that property in your tax return. The beauty of that is you then end up with a loss as far as your tax return is concerned, based on how much your employer paid in tax and what you should have paid in tax. The taxman will then give you a refund. So the negative gearing, you're still ending up contributing some funds to it. The example we see here is a $400,000 investment property with somebody earning around that mid-80s in terms of declared income. The line there of $9.66 is a illustration that confirms in my mind that getting out and looking at how to use tax tenants' money, because you're obviously going to have a tenant sitting in there paying a lot of the expenses going out, and then a little bit of your own, it is affordable in terms of taking that step into investing if you haven't already done so. This, of course, assumes that you haven't contributed